Hey all, Tom Weller here. I got a really interesting thing to share with you. I was going through my notes and basically my trading journal over the last few years, and I found an interesting part in my journal, a bit of a mantra part. It's basically a little bit of a positive thinking section. I thought I'd share with you guys just to show you some of the problems I actually had in trading as I was going through the years, and some of the problems I still actually face sometimes in trading as well. Like, none of us are ever perfect in this business. It's not in fact, it's not really a business for perfect people either. So anyone can do trading. It's you just got to have a desire that you want, a desire and want to be good at it. Like any skill. Like driving a car. You're not good in the first, 4 or 5 months, 6 months. You're pretty bad. Parking is difficult. Reversing is difficult. But then over time, I drive a car now, and it's second nature. You don't even have to think about it, if you can understand what I'm saying. I mean, that's the sort of development of the brain, the mind, and the concept of trading that you want to develop over time. And we all get better at this. There's no such thing as, like I said, there's no such thing as a perfect trader. We all have down months and we all have up months, and overall, we're just going for a profitable, profitable strategy. We're just trying to make money, basically, over the long haul. And like I said, in part 4 of Price Action Traders Mindset, if you haven't watched that series yet, I highly recommend going and checking it out. I'll leave a link here so you guys can go and check it out. And so far, that's at 4 parts. In part 4, I went over the psychology of the Forex market, which is a massive impact. I mean, how we think about the market, how we react to the market. A lot of it's related to how we think in our mind. And one of our biggest enemies in Forex is our mind. Okay, so back to my point. Okay, so I went through some of my old trading journals, and I found this section. I just thought I'm going to share it with you, okay? Because it was like a bit of a daily mantra for me. And what I mean by daily mantra is it would be something that I'd say to myself once a day or once every couple of days during the trading week. When I was about to do a trade, I would go over and just read this. There's a little bit of positive thinking sort of aspect, like trying to develop that positive side of me to the approach of trading, because we can all have bad weeks and it can affect us emotionally. Sometimes it's better off if you have a bad trade to, get out, do something that you enjoy to try and take your mind off it. Okay, so let me go through the list. Now I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's 10 points, and some of them are actually repeated a couple of times, so you can see if you can relate to them as well. Okay, the first one is I hold positions based on price action. Basically, what it meant was that I trade based on price action, and I also trade based on price action and structure. And that's what I was trying to say, was that, always wait for price to get to the zones that are high probability. Don't trade in between. And then look at price action there, or then enter a trade at those zones. My second point was I am good at holding. Okay. Now, it doesn't matter if you are good at these things. I actually wrote these when I wasn't good at these things, when I was trying to get better at these things. Right, I would cut my losses. I would take profits too early. So I had as my second point, I'm good at holding. The third one, I always let my trade go to the target. And that's a big one as well. A lot of traders, like you might be willing to open a position, and you might get it to break even, and you see a little bit of weakness in the market, and you might just take your profit, and then later on you come back and you're like, oh, I got to my profit target, which was maybe like 120 pips or so, or maybe it was 100 pips, and you took profit at 30 pips because you're afraid that the market would retrace and hit your break even. And so that's what that point is about. I always let my trade go to the target. And this is one thing that one way that I found that was really good to fix this problem is I'd enter 2 half positions. The first half position I would actually get out at the first problem area, where I'd actually lock in the other target at break even. Now, If you're not good at spotting structure on the chart just by looking at the chart, then what you can do as an alternative is you can actually lock in at break even at the 38.2 fib from the initial move down or the initial move up. Okay, so that's another option you can use. You lock in break even at 38.2, and then you go to a full target at the 61.8 with the one position, and you lock in and you take profit on the other one at the 38.2, and you lock in the other one, and you get into this pattern of taking off some of your profits and then holding on to some of your profits. So you're still allowing the trade to run, which gives you the good risk reward, and you're also allowing the market to do its thing. You don't feel so bad when it comes back and hits your break even because you've already taken profit on half a position. Okay, so the fourth one is I am a good trader. Now, if you're into mantras or positive thinking, you've got to put down what you want to be. Even if you're having problems in trading, you've got to put down what you want to be. So the fourth one is I am a good trader. Of course, that's a good one. The fifth one is, and you could call these also, you could call these I'll get back to that in a second. Hold on a sec. Let me just go through the list, and I'll talk to you about the perspective of why these are important. Number 5 is I am okay with losing on a trade. You just got to remember, like I said in part 4 of the price action traders mindset, I said that trading is a process, and so that gives me that edge to be able to have good months sometimes, and on average have good gains, every month. But if I didn't have that edge of understanding the trading is a process, I would sit there stressing about the market, and I would take bad positions and not follow my strategy. Okay, the more you follow your strategy and stick to the process, you'll generally find the more profitable you'll be. Okay. Right. The sixth one is I am patient in trading. This is a patience game, guys. If you're into Forex, if you want to just take a trade and you want to exit 10 minutes later, then you're more scalping the market. Now you can learn some really easy to use scalping methods. I don't recommend them long term because scalping tends to be on the side of almost like borderline gambling mentality. But however, you can be a successful scalper. But the thing is, it's the same as any other normal trading. You have to wait for the perfect structure zones. And if you guys want to know a little bit about a simple scalping strategy that works quite well, just let me know. Just comment below and let me know that, and I'll actually share a video on a simple scalping strategy. It doesn't have a high reward, and the risk is more than the reward, but at the same time, you can get runs of like up to 20 to 30 trades in a row, all successful. Okay, but that is about following structure. Once again, market moves in a certain way, and so you have to focus on the way that market is moving. Okay. Number 7. Okay, I follow my analysis exactly. Right? That's good. When you create an analysis, don't try and argue with it a bit later. Once you've entered a trade, you follow that analysis until that analysis ends, right? Until that trade ends, then you shouldn't change your analysis, right? Now, you could be in a position that you've been holding for a while and it's in profit, and your analysis changes. That's different. That's a little bit different. You can start to tighten your stop. You've realized you're in the profit zone. But what I'm trying to say is a bad habit is actually believing that your analysis is wrong on a trade. And this is a bad and stressful habit, to believe that your analysis is wrong on a trade. Once you enter a trade and in trade is in drawdown, just let the trade hit your stop. All right, just let it. If the stop is there for the reason to, if you're wrong on that analysis, that's what it's there for. All right, and if the market does move up and you realize, and your trade does move into profit decently, and you do realize that your analysis is wrong still, and you're like, okay, well, it broke the structure low and it's creating impulse legs lower, so I'm thinking it's going to go down, and I'm buying, and now it's coming back to retest structure as resistance. Well, then yeah, you can just put it at break even as soon as it gets above that mark, or you can just close the position. That's a different form of analysis right now, because you've looked at the market, you've looked at what the market is doing, and you've held the trade for a while. But that thinking of, oh, I'm wrong instantly the moment you enter a trade, it's not a good habit to get into. Okay, so have your patience, let your stop be taken out if it's wrong, or if the analysis does end up wrong and then it comes back and tests as now resistance or something different to what your trade is, you can get out of that position after that. Number 8 is I love holding my trades. I went over that. And number 2, I went over I'm good at holding. I love holding my trades because this is one of the key aspects of Forex, is holding a trade, letting it run as long as possible. And one of the best ways of doing this is, like I said, you open up 2 half positions. One of them you take profit at the first problem area, and the other one you let run. Now, the one that you let run, as it produces higher lows, like say it breaks above structure, say it's an uptrend and it's breaking above structure and starts producing high lows, you can pull your stop up to below those high lows as the market keeps moving. And you can just keep doing that. And that allows us to sometimes get, up to 300 or 400 pips on a move, or up to 100 to 200 pips on a move. I go over this on how to get in my video on how to get more than 100 pips from the Forex market. You're looking for big moves, you're looking for big structure plays on the daily and the 4 hour, and then you're taking those and you're allowing it to go to the next major structure. And in order to do that is if you want to allow the market to move even further, you pull your stop up. The concept of take profit, you can sort of get rid of it. Take profit is a lot less important than your stop. Okay, and you guys might, you guys will get more familiar with that as you get more into trading. Your take profit is not such an important aspect in trading. If you're going for a long-term target, like off the high time frames, yes, you can leave a take profit at your destination. But what I'm trying to say is pulling your stop up is going to be much more beneficial in the long run, and then actually having a take profit. Of course, taking profits off along the way. Okay, number 9 is I'm a positive person. Now, this is important. Okay, all right. You have to be positive in order to find high probability trades. You have to be positive about the Forex market. Now, what I mean by positive is just you've got to look at the market like, I know what I'm doing. Just stick to your process. Keep at it. You're going to make money. And that's what I mean by positive. You've got to be positive about the Forex market. You've got to be positive. You don't want to look at news and look at negative aspects. Oh, the economy's falling down, or Europe's falling down, or America's falling down, or whatever it is. You've got to remember that 90%, like as I mentioned before, you should never trade fundamentals. 90% of fundamentals are all hype, right? Okay, the market can rally up on negative news, and it can rally down on negative news. And once you guys see that a number of different times in the Forex market, in many markets, the market's going against the major fundamentals, you got to get to the point where you actually just want to scrap them completely. Don't even listen to them. Right? Europe could get the best news on the planet, and it could be selling off. Right? Just like it could be getting the worst news on the planet, and it could be getting the worst news about crises in Greece and everything, and the market just might keep rallying like it's doing recently. It's been rallying a lot, and there is a lot of problems in Europe. Okay, there is, in some countries in Europe, there is over 30% of people starving, like not starving, like homeless. Okay, there's over 30% of people homeless in some countries in Europe. Okay, and the euro is rallying. It's up around 136. So, what's that tell you? Fundamentals do not, and I emphasize, do not move the Forex market. They do not. They, if you want to look at fundamentals that do move the market, it's more like non-farm payrolls, stuff like that. But at the same time, they're so unpredictable. You can get a good non-farm payroll and the euro can rally, and you can get a bad non-farm payroll and the euro could sell off. It's strange. The fundamentals and news do not necessarily align with each other, and that's because the big players don't trade it that way. Now, if you are a news trader and you are successful at news trading, keep doing it, guys. It's fine. I'm not a news trader. I'm not interested in focusing my time on the news. To me, it's all hype and glamour, And certain news I do focus on more, like GDP and stuff, like GDP ratios and stuff like that. Like as an example, though, you know, Britain got recently a really good GDP, going back about a bit over a year ago, and which indicated they were coming out of recession. Now, it wasn't until about 3 or 4 weeks later that they sold off over 1,000 pips. So you got to ask yourself, did the fundamentals actually make an impact on that pair? And then you could say, oh well, this news sold it down, and this news is now bringing it up. Well, you're going to be sitting there always trying to second guess what the fundamentals are saying. And you know, as traders, we can just follow price action, we can follow the structure, and it doesn't really matter whether the countries the news is positive or negative. And you know, overall, we all hope that every country is going to be prosperous, is all going to be doing well. You know, we all, you know, I always have a positive feeling about the US and a positive thinking about the Europe, because this is real people. This is real people's lives. A lot of people are losing money. A lot of people are struggling. Yeah. And so we have to be positive for these people as well. But at the same time, you know, we don't want to trade based off what we feel about a market. We want to trade off what we can see, and we react to what the markets are saying trading, because a lower euro doesn't help the euro, is not, it's not going to make a difference to, you know, the economies over there. Okay, in fact, a lower euro could actually improve the economy in Europe, because they are highly export-based country sector. Like that whole area is based on. But let's not get into fundamentals. Try not to focus on that, right? Just try not to. Keep away from that. And so part of being a positive person is trying not to get wrapped in all these doom and gloom stories, right? Just focus on the charts, focus on your process, your strategy, and just keep at it. Okay, and be positive about it. Be positive even when you lose a trade. It's okay. You know, it's not the end of the world. This is not a life and death sort of situation. Even though the brain likes to see a loss as a really painful, hurting situation, like it's a battle, it's okay. Your ego can deal with it, and I'm sure you can move past that. Number 10 is I am positive at trading. I suppose I just went over this twice, and I said I'm a positive person and I'm positive at trading. Basically, I was just saying the action side. When I trade, I open trade. Yeah, this is going to go well. And I open a trade, and after that, I've got the way you want to see that trade is after you've opened that trade, you want to see it as, okay, well, I've opened this trade. I have two options. I mean, I have three options, right? My trade's either going to go to hit my stop, or it's, if I do decide to use break even or pull the market up, it's going to come back and hit my break even, or it's going to come back and hit my stop in the profit zone. Now, if you're wondering what break even is, guys, for all the newbies that are possibly watching this video for the first time, I just mean that I pull the stop up above into the profit once the trade has gone a decent amount in my favor. Every trade is different because it's based on structure and based on the candle play into the reasoning behind why I put break evens. You're going to have to watch a lot of my other previous videos in order to find that out though. Okay, so, and the third option is it gets to my take profit. So as a positive trader, you have to think of the market like that. Okay, this trade could be a loser. All right, this trade could be a winner. I've done my analysis. I know my process. I know my strategy. I know how it all works. So I'm just going to stick to that. And that's basically it in a nutshell, guys. And so anyway, these are my 10 points that, you know, I held on to. Basically, I did this mantra basically for, you know, nearly 6 months or a bit longer. And, you know, I still today, I do actually say these sort of things in my head when I'm entering a trade, like, you know, you know, it's like the conditioning of the mind. You know, let your stop and let your take profit and let your position handle itself, right? And that doesn't mean don't watch the market and all that sort of stuff. It just means, you know, you've done your analysis. You've done your analysis of where to put your take profit. You've done your analysis of where to most likely set your trade at break even. So once you've done that analysis, it's time to, you can, you know, go watch a movie or go out, do something. You know, you don't have to be at your computer, right? And just when the alarms go off, you know, if you've got a mobile phone, you can go into your Android or whatever and pull the stop up, you know, to your break-even zone. It's risk-free then. Or you can, you know, come back to your computer from wherever you are and pull it to break-even. and you know, takes that added little bit of stress out of your trading, because you've got a more positive perspective. So anyway, I hope you guys have enjoyed this video, and you could also call this a bit of a positive attraction in trading, you know, and it does relate to my psychology video I released yesterday, which was part 4 of price action traders mindset. And yeah, I just wanted to show you that, you know, like, we all go through this process, guys. We all do as traders. In fact, I still do. I still get, you know, I still get negative about my trading sometimes. We all do it. But like I said, you stick to the discipline, you stick to your process, you be positive about it. You know your process is successful, so you just got to remind yourself, okay, look, yeah, okay, I got a losing trade, move on. And that's the process that we get into, you know. The more you do it, the more you'll find it easy, and the more you'll find you'll be more profitable. Okay, well, thanks for watching, guys, and yeah, I'll speak again soon. Okay, bye for now.